Hey, today I show you the higher frequency Nasdaq Mean-Reversion strategy with MR ratio above 1.28 and Sharpe ratio above 1.43. And this is with the trading commissions and with delisted symbols. First of all, let's look at the strategy and then the results. But let's start with the strategy. What this is even doing. Usually we have made mean reversion for S&P stocks and Russell universes, but now we made one for the Nasdaq. Why Nasdaq? Usually the Russell and S&P stocks are the best for mean reversion because the stocks are moving a lot. But in the Nasdaq 100, there are very stable stocks that aren't very volatile. The Nasdaq universe is unique, and we can catch small pullbacks. Another nice edge is that Nasdaq stocks usually hold up better because those stocks are the best companies, and large funds are holding those stocks, so that means it's safer to buy a pullback, and we know there's a smaller chance of catching a falling knife. With Nasdaq, we cannot use entry huge limit orders that buy when the stocks are like 5% below their close. Nasdaq stocks aren't moving that much, and we are not using huge limit orders like we are usually using when we trade Russell or S&P stocks. But what makes this strategy unique is that we are using the EWMA indicator, which is basically predicting the volatility. It's a well-known indicator in machine learning quant funds. Below is the link about this volatility forecast research. Also, we are using one statistically proven pullback rule from the Larry Connors and Cesar Alvarez book called Short-Term Trading Strategies That Work. And that's it. Rules are very robust. First, we need stocks from the Nasdaq universe. Then we need uptrend and a volatility forecast rule and pullback. We are using a limit entry and limit exit and exit rule. And to make sure it's tradable in real-world conditions, we added interactive brokers' commissions and a limit extra buffer. Because in real life, you are not getting always filled where you wanted. We can also quickly remove the commissions and limit extra. And we can see the strategy isn't very sensitive to extra fees, so the extra fees aren't killing the strategy. And we can reduce the maximum number of positions from 10 to 5. Now it's making more money with more volatility too, as expected. Maximum exposure is 100. This year is perfectly up. This is a very good setup if you want to use something with very low drawdowns. To add this to your portfolio, it can be a good diversifier. Also, we are planning to make a group where all of the guys who have bought any of the strategies can be in. The goal is that the traders who bought the strategies, we can all talk about those strategies, go even deeper, and discuss strategies, portfolios, etc. Next week, I will send an email about a little survey for the buyers, then we'll know what platform we should use to make this group, like Discord or whatever. So if you want to also answer in the survey, grab one of our strategies. But if you don't, then you can join any time in the group, if you buy a strategy in the future. It's a 100% free group. No monthly subscription fees or something like that. Together we can learn faster and better. Make sure you grab this strategy now. Use the link in the description below. We are on Substack also. Click subscribe there too. Also, if you had any question that was left unclear, feel free to ask. Our email is in the description.